Hey guys, how you doing? This is a little test video I'm doing this morning just to see if everything's working right. I figure I'd take you through a couple things. Alright, so if you can see the screen right here and you see my cursor, as I was talking about in the last show, here is implied volatility. Here it is. This is the daily chart. You can see every candle is 1 day, right? And this is the implied volatility. So when you buy into options, you become part of this indicator, and the options market between their ask and their bid creates this indicator. So when you partake in that ask and bid of the options market, you're actually becoming an indicator for stock traders and people that are analyzing the equities market. They're looking at implied volatility. Oh, look at the guys in the options market think that it's ramping up a little bit. Maybe in 2 weeks this is going to be more volatile. I don't know if that means up or down, but it just means more shake. All right, so I was going to take you through a little strategy here. This is called the butterfly. I have DoorDash up here. Um, DoorDash, by the way, let's see the implied volatility on DoorDash. So if I put it in right here on my one watch list, dash, we got an implied volatility of 41. Some trading platforms might be 41. It might say 0.41, whatever it is. It's from 0 to 1, whether it's 0 to 1 or 0 to 1,000. This is 0 to 100. So this is just about 40% implied volatility. That seems decent for um, strategies because the 40% implied volatility will give your sold calls a nice bid. So here's the analyze screen. Let's go through some shapes here. Okay, so first I'm going to go to the trade screen. I'm going to go to DoorDash. I have DoorDash on. Let's go in 3 days. Just a quick one. All right. So let's say we think it's going to go up. Let's look at the analyze screen one more time. You see this right here? That's the expected range. So it's expected to have between 106.50 to 116. So let's say I think it's going to go up, and I'm going to try to get the edge of that 116. So I go to the trade screen. In 3 days, do you think it's going to go to 116? Let's say I do. So let's say I'm going to buy the 114. I'm going to sell the 115, and I'm going to buy the 116. Right next to each other. Boom, boom, boom. Creates a tent, right? A triangle, right? You want the stock to basically end at 115 by this Friday. You want it to be as close to 115. Now you could sell it at any time. I like to let them run off the clock though, and hopefully it's somewhere very close to under 115. So I don't want to do 10 though. I want to do, and the butterfly is like this. It's one, two. I'm sorry, two, one. You're plus one, or you're buying one call, you're selling two calls, and then you're buying one call. You're buying one call at 114, you're selling two calls at 115, and then you're buying another call at 116. You are buying two calls and you are selling two calls. Therefore, they will equal each other out in some way. Now, if that's advantageous to your account or your pocketbook or your wallet, that's what the hunt is for. All right, so if I go to confirm and send on now, this is pre-market, so this might not be totally accurate, but all right, it's telling me that I can risk $18 to try to make $84. My max loss is actually $16. So it's going to cost me $18.65, and if it does land at 115 or very close to 115 this Friday at 4 o'clock Eastern Time, then I will probably make very close to $84. I could send that through. Now, here's what that looks like. Oh, hold on. We're going to go analyze trade. There it is. My max loss is $16. Here's zero. These lines, that green line, that turquoise line, that is till Friday. That's till Friday, right? So as of today, you go off the purple line. It's not quite Friday yet, so this is moving math. So it will shape this by Friday if I'm correct. It will snap up and keep going up. And as of now, as of today, if it goes to 111, 112, I can get my money back. At about 111.50, as of right now, now as time ticks, that's going to move a little bit. But it's not going to move that fast. It's still the beginning of the week. So that's where you're at today, but that's where you'll be at Friday. So if you look at the turquoise line, it's telling you that's till the end of the week or the end of your options expiration. If these were 3-month options, it would still be the same. I don't know what the percentages would be, but the shape would pretty much be the same. So my max loss is $16. I can't lose any more than $16. My max gain is what it looks like is about $84. I saw 83. Yeah, 84 right there. That's 115 even. Now, as time ticks, if you ever bought a single call or a single put, you know as time ticks, your strike price, what was 115, your break even starts to veer upwards a little bit away from where you're at. So your break even might be at like 115.27. But when you do them in strategies together, they offset each other. So your break even is still going to be around 115 because the sold calls keeps it in place. Now you don't have to worry about all that math. The systems do the math for you. You got to worry about how can you combine these sold versus bought calls or puts. How can you combine them to squeeze some money out of the difference of them? You don't have to worry about doing all the big time math behind it. You just got to worry about how can you. Is it a good play to try to squeeze some money out of the difference of it as time ticks and this stock moves in the direction that I think it's going to move in. So that's a butterfly. Now, you could also play it safer and you could say, all right, I see he's going to pay. See, I'm paying $16 for that, right? Because it's the skinniest tent I can make. There's no strikes in between. However, let me just X this one off. If I wanted to do a butterfly and I wanted to do, I'll still sell 115, but this time I'll buy the 113. I'll buy the 113, right? And then I'll sell the 115. Where am I here? And then I'll buy the 117. Okay, so same ratio, just skipping some strikes in between. Still going to go 1, 2, 1 because you're making a butterfly. 1, 2, 1. Buy 1, sell 2, buy 1. 113, 115, 117. All right, what's this? All right, so now I can risk $34 to try to make 166. So before it was 16 to 84. 16 plus 16 is right around at 34. It's 36, but this is 34. 166. 84 plus 84 is pretty close to 160. See, the ratios are the same. You're just going to pay a little bit more if you start skipping strikes. Because now, when you go to analyze it, look, it's just wider. Same thing. It's just wider. You see? The leg just comes out wider. My max loss on the turquoise is $50. Oh, hold on. My mistake. I have the old one on. I got to get the old one off. There you go. That is the one I just put on. Yeah, and as you buy multiple strategies, they can form a bigger shape, you know? So I have two there. They're overlapping, but I could put one right here. See? If I went and put the first one we put on and I made it right here, I could go, let's say I went 107, 108, 109, and put that on. Now look. Now I have, okay, so the stock is here, right? The stock's around 106.50. Well, if by Friday it goes to 108, I could make $40. However, this whole thing, because I'm adding more strategies, now costs me $50. So my max loss on two strategies here is $50. If it winds up here, it's $50 loss. If it winds up here, it's a $50 loss. If it winds up here, I'll make $41, so it'll be a $9 loss. This is the best one. This would be 140 or so, 145. So you can combine trades. I'm going to get rid of this one. So this is the other one. This is the one I just put on where we skip some strikes. So you basically move your legs out a little wider, and you pay a little bit more money for that. Well, this was a test video on some stuff and the lives here. Let me also do one more thing. I'm going to switch screens. All right, back to the option scanner. Like I said, I want this to be mostly just the option scanner during the bell. But if I want to do like a live stream or something later on, I could switch videos like that and show you strategies and things like that. All right, so stay tuned for later on during the bell today. I'm going to go over Delta, Gamma, Theta, and Vega and how that plays into the option scanner. That's going to be the traditional show. That's Call Note with Farleezy. This is a test video, test live stream. I might do more of these. I think everybody would like to see how you build the shapes of the options and stuff like that. All right, see you later.